as the stock market continues to go higher and higher, while at the same time the American consumer continues to cut back more and more. Many of us are looking at this and we're confused. How can both of these be happening at the same time? Why is the market going higher? And are we at a risk for a crash? And what I like to do in situations like this is not just look at the data myself, but also look at investment gurus that I respect. So in today's video, I want to look at what Warren Buffett is doing and share with you his somewhat bizarre warning, not just what he's saying, but what he's doing. And then at the end, I'm going to share my thoughts on how we should incorporate this into our own thinking. Okay, so the first article I want to share with you is by Investopedia, and it's titled How Warren Buffett's Berkshire Hathaway Grew Its Cash Pile as It Sold Stock. Okay, and the important point is this first key takeaway. Berkshire Hathaway's cash and U.S. Treasury holdings rose to a record high in the second quarter to almost $280 billion as it's trimmed several stock holdings, including Apple. So that's what he's doing. Warren Buffett is clearly raising cash. Now, is this a lot of cash for Berkshire Hathaway, which is the company that Warren Buffett runs, the holding company? We're going to find that out in a little bit. But first, let's look at, is Buffett worried about valuations? Is he seeing the same thing that we're seeing? And is he as worried? The nice thing is Warren Buffett has shared with the world the indicator that he thinks is the best to determine whether the stock market is overvalued. And we call that the Buffett indicator. And this is information as of the end of May. The Buffett indicator is the total U.S. stock market value divided by the United States gross domestic product. So if we look at that as of the end of May 2024, the U.S. stock market, the total U.S. stock market cap was $55.8 trillion, and the annualized GDP of the United States was 28.3. So it's almost 2x. It's almost 200%. It's 197%. But how does this compare historically? Maybe this is average, maybe it's not. So let's look at the next chart. And this goes all the way back to the 1950s. Same ratio, market cap of all the companies, publicly traded companies in the U.S. divided by the U.S. GDP. And what you can see here is it's at one of its highest points ever. You can see it's more than 2 standard deviations away. So this is what the ratio is, and it hasn't been this high except for just recently, shortly after COVID. So that is telling us that Buffett's favorite indicator is saying things are expensive out there. And at the same time, if Buffett holds an annual shareholders meeting every year, and in that meeting, he tends to be a very optimistic, a very nice guy, and he clearly was not saying a recession is coming. He was not saying a bear market is coming. But when we look at his actions, when we look at what he's doing as opposed to what he's saying, clearly Buffett feels, in my opinion, that the market is overvalued. There's not many good deals out there, and certainly not many good deals of the size that Buffett needs. He needs to buy big companies because he has a lot of money to deploy. Okay, so Business Insider did an article, Why Warren Buffett's record $189 billion cash pile isn't the market crash signal people say. So I want you to see both sides of the coin. Now, back when this came out in June of 2024, Warren's cash pile was about 190 billion. As I said, it's a little over 270 billion now. So it's increased by, 50% since in the last 3 months, since that report comes out. And they go on to say that at 190 billion, the cash pile is at 17.5. So at 50% higher than that. We're somewhere between 23 and 27% of Berkshire Hathaway's portfolio is in cash. So they, at this time when it was 190 billion, they say at 190, at 17.5%, Berkshire Hathaway's current cash position is about in line with its long-term average when measured against the firm's total assets. Berkshire Hathaway has kept cash on its balance sheet of an average of 13% since 1997. But if we look at this chart here by the compound, I should have said back up here earlier when I had the Buffett indicator, thank you to currentmarketvaluations.com. That was the source for it. The source for the cash holdings is the compound. And you can see it's at the higher end of things. It's certainly not the highest it's ever been, but it's at the higher end of the range here at 21%. As I said, I think it's even higher than that now, closer to 25%. So this Business Insider article goes on to say, Berkshire Hathaway, to remind us really that Berkshire Hathaway is required to hold on to cash, and that's because some of its primary operations are insurance companies. And if there was a national disaster and you and I had insurance through Berkshire Hathaway, we'd want them to have the cash to pay us. And so that's one of the reasons that Berkshire Hathaway holds on to cash. And Buffett has stated that Berkshire Hathaway will maintain a permanent cash reserve of about $30 billion to fund potential insurance payouts. And Business Insider was interviewing an investor, I'll get to his name in a minute, that owns Berkshire Hathaway. And this person was saying, yeah, but I think we need to add about $50 billion to that, just so he has a year's worth of insurance cash reserves. So this person was saying that number should be closer to $80 billion. And he goes on to say, Warren Buffett, is limited to maybe the 100 biggest companies in the S&P 500. Getting back to what I said earlier, at Berkshire Hathaway size, at the portfolio size that Warren Buffett and his team are managing, they can only take shots at the biggest companies, because to deploy $100 million doesn't move the needle for Berkshire Hathaway. So he says he's limited to maybe the 100 biggest companies in the S&P 500 and maybe a handful of international businesses. So his opportunity set is small, and those companies are expensive. But Warren Buffett doesn't mind earning, this person says, 5.3% in the interim, and it does not mean in any way, shape, or form that a stock market crash is imminent. So this person's saying it's not a signal that the stock market crash is imminent. Now, many people have pointed out that maybe one of the reasons that Warren Buffett is holding these high cash reserves is because right now interest rates are higher. And according to this report, Buffett, with his cash and cash-like reserves and treasuries, is getting paid north of 5%. But Buffett said in an interview once that he would hold that cash reserve even if he was being paid 1%. So it has something to do, but at these levels, it's not dramatically influencing his decision. So it's not the fact that he can get so much on his cash right now. He'd much rather be in a great company at a great price if that existed. So people ask Buffett, what are you waiting for? What do you have all this cash? And Buffett's reply is, we only swing at pitches we like. And I think that sums it up, right? He just hasn't found the company that he wants. As the Business Insider report indicates, Buffett's limited to probably 200 companies in the entire world that he could buy. That's not a whole lot. And right now, as we talked earlier, valuations are high. So that's what Buffett's doing. But what should you and I be doing with this information? Just like for Buffett's portfolio, he has about 25% of his portfolio in cash. The Business Insider says normally his allocation is half of that at 13%. Even 13% is high for a lot of people. So Warren Buffett has money set aside because he can't predict the future, just like you and I can't predict the future. He's got some of his money set aside because he knows he might need it, because he's running an insurance company, or it could be a national disaster, and he might have to pay out $30 billion, $50 billion, $80 billion. And then above that, he's got some money. It's not an all or nothing thing. He has 10 percentage points, let's call it 10 percentage points more than normal. So what should we be doing? First, just like Warren Buffett has an asset allocation, he doesn't have money invested in the stock market that he might need in 30 days, in 6 months, a year, or probably even 2 years. He only invests in the stock market money that he can leave in to weather out the storm. It's probably at least a 7 to 10 year time horizon is what I would guess. That's personally, as a financial advisor myself, what I tell people is reasonable. is money that you need within 3 years, you probably shouldn't put in the stock market. And I think it's a lot safer for folks if they have 7 to 10 years to let that money in the market. So having an asset allocation and sticking to it is key. And then, like, maybe Warren's worried about the stock market right now. Maybe he thinks things are overpriced. Maybe he thinks a recession is coming. Maybe he thinks there's going to be a stock market crash. But notice that Warren Buffett didn't go to 100% cash. He's not making an all-in prediction. I think people get hurt. Will you get hurt if you set aside 5 or 10% of your portfolio in cash in case the stock market goes down? I don't know. I don't know your situation. Nothing I'm sharing in this video is financial advice. But in general, for a lot of people, setting aside 5 to 10% more in cash or in stable, secure bonds that will be easy to liquidate can be a decent strategy if you think that the market is going to go down. Again, making a big bet, you're much more likely to miss out on that, right? Because it's not timing the market that helps people win, it's time in the market. And that's because the market has a tendency to go from lower left to upper right over time. So if you can stick with the market over time, and if you like this video, the YouTube algorithm says you're going to like this video as well. Take a look at it and let me know if YouTube made a good suggestion for you. This is one of my videos as well. Thanks for watching this one, and I'll see you in the next one. Bye-bye.